Hey everybody, welcome to Mr. Money Sense TV, the channel where we help you earn more money, keep more money, and grow more money. Today we're going to be talking about some financial terminology that you hear often in the news, or just like if you're ever watching CNBC or Mad Money or any of these shows, you're going to hear these terms and you may or may not know what they actually mean. When I first started into finances and buying stocks and things like that, I really had no idea what they meant. So I know it's not necessarily common knowledge for people, so I thought I'd kind of lift up the curtain and dive into why these terms exist. And those terms are bull market versus bear market. So that's what we're going to look at in this video, is to see what the difference between a bull market is and a bear market and why these terms exist. Bull market and bear market are two different terms that are used to describe the movement of the stock market. And what exactly the stock market is may vary depending on who you're talking to. So the stock market is just kind of a loose term used to describe, it could be either the actual stocks listed on the New York Stock Exchange, or more commonly it's used to represent like an index, such as what's called like the S&P 500. So the S&P 500 is just a grouping of 500 of the biggest companies in the US. And those 500 companies are meant to represent the total US economy in terms of businesses. So bull and bear markets are then used to describe what's the movement of that S&P 500. However, it can be used to describe other markets too. So it could be used to describe a bond market, which is just loans instead of owning companies. It can be used to describe foreign stock markets, or it can even be used to describe gold or different assets like real estate. So it can be really tied to any different asset that has kind of an exchange of value, or a market where values go up and down. So where do these terms come from? So a bear market is a term for a downward moving market. So it's a market that is on a downward slope. And a bull market is a market that is on an upward slope. And where these attachments come from may really make no sense to you, but once you kind of hear the actual story behind it, it makes a little bit more sense, but still not much. I don't know how these terms ended up coming to stick, but they did. So that's what we work with. So both of these terms come from actually how these animals attack. So if you think about it, a bull, when it attacks somebody, what it does is it runs up to them and kind of flicks them with their horns. So kind of flicks them in an upward motion. So that's how the bull market came to be, because it's a bull attacks by flicking up, and that's the way the market movement is going. Whereas a bear market got a term from the way a bear attacks. So if a bear attacks, what it's going to do is it's going to swipe its paw down, and it's going to attack its prey that way. So that's how these names came to be. Again, I know it doesn't make much sense, but that's what we have, and that's what stuck. So how do you know if you're in a bull market or bear market? Obviously, you can look at just like the movement of the stock, and you can sometimes clearly see just a clear line that the S&P 500, for example, has been going up and up and up. Or other times, like say in 2008, you can look at a stock chart and see that it was just straight down. Sometimes it's pretty clear to see whether it's kind of a bull market or a bear market, but how it's actually looked upon by like analysts and just different financial professionals is a bear market is determined when there's a 20% drop in the market. So if the S&P 500, for example, drops 20%, then it is decided that it is a bear market. Whereas bull markets are usually associated with growing economic conditions. So growing consumer confidence, growing GDP, those sort of things are usually tied with a bull market. So this is the different ways that you can determine whether we're actually in a bull market or bear market. Hopefully you found this video useful, and so now the next time you go to watch CNBC or another financial show like that, you'll be a little bit more savvy with the financial jargon that they're throwing around on those shows. If you found this video useful, in the comments below, tell me some other financial jargon that you have trouble understanding what the terms are, and happy to clarify, and maybe I'll make some more video contents on other financial jargon that is just not common sense knowledge. But also make sure you subscribe to our channel. We provide a lot of valuable insights on how you can earn more, keep more, and grow more money. Cheers.